Greetings, members one and all of the Salivation Nation. The path to $12 silver. Let's explore. You might be asking yourself a question if you've been watching my channel for the last few months. And that is, why are you talking about silver going down so dramatically after you have been bullish on silver for the year 2021? Well, the answer lies in what happened about a year ago, this month, with silver, that could happen again, especially after what we have been seeing with silver in the past few days. It's gone down some. And what's going to really trigger a massive drop in silver's price, and by the way, what price am I talking about? I'm talking about the spot price of silver. Because we know that with premiums, that there are many people out there who are paying a lot more than spot price for silver and are getting more than spot price when they go to sell the metal. There is a great demand for silver right now. It's unprecedented. Even greater than last year's. But there is activity and movement in the ETF world, the exchange-traded funds. In fact, I have talked to several people who have put money into the exchange-traded funds in the real world, not just here on YouTube. And there could become a time, especially for those who don't completely understand the dynamics of what silver is about. What will they do? They'll do what happened last year when there is a slight little mini panic. And that's what we saw when the coronavirus hit in March of 2020. We saw silver take a pretty big hit. It dropped down below $12 an ounce. But almost immediately, we saw a great demand for silver in the physical. That was the separation between the spot price and the physical price in terms of buying the metal. And we saw also the premiums being honored, at least to some extent, when it came time to sell. My local coin shop, for instance, was paying $4 or $5 above spot for silver eagles at the time. And now they're paying above spot again, and even for generic silver rounds. So that's the kind of thing that we saw last year. And the question is could that happen again? Most certainly. And this time it could be because of something much more serious. Now, obviously, the panic around the coronavirus, there was a lot of unknowns at the time. And now that we have digested this coronavirus, and there are some vaccines that are being distributed with a new one, Johnson & Johnson. There's 3 vaccines that are now available and distributed here in the United States and other vaccines around the world. Some think that we may be at the beginning of the end of this. How long will that be? I don't know. Most assuredly, this thing has been politicized to the nth degree. We talked about that. But we are going to see some activity and potentially some increased economic activity, at least to a degree. That's going to mean velocity of money, velocity of currency flowing through the economy, and that is going to lead to inflation. Just yesterday, I posted a video talking about how Jerome Powell admits that there will be at least some inflation coming ahead. But you know what? Inflation occurs every year by design. The dollar loses value by about 2% each year by design by this institution, the Federal Reserve, and they will continue to do that. But there will be inflation that's not designed that will occur as well. And that is going to happen in multiple aspects of the economy, measured by organizations, and we will see it probably increase as the economy begins to, quote, recover. But we use that term loosely as well, because we don't know exactly to what extent this will be, how much damage that has been done with all of these programs, the toolbox that the Federal Reserve has, and of course policies, taxes, and the like. Will they raise taxes? My guess is probably so, in due course. But you think about it, every time the Federal Reserve does quantitative easing, it's essentially like a tax increase, because if the inflation rate is 2.5% and you get a 2% annual increase each year, well, generally you've lost half a percentage point of your salary, and that can be considered a tax hike. So it's definitely a lot of things to take into account and consider. But if there's any sign of economic trouble, especially in the stock market, you are going to see people run to the safety of cash, because that's what happened last year around this time. And they will run to the safety of cash because it is the thing that everybody has faith in. Everybody, yes, including you. You that are watching this video, you have faith in cash. And that's going to be a subject for another video. So I won't get in too much and too deep with this. But this debt instrument is definitely has value. And people see and understand that value, at least in their lizard brain. You know what I'm saying? And that's really what it's about. In times of panic, we use what is referred to as our lizard brain. And so that leads us to going into the safety of cash. So cash is something that people run to, and that is a psychological aspect of the economy that most of the stackers have a hard time wrapping our head around, because we run to the safety of these precious metals, silver. I don't have any gold in front of me, but also gold as well. And gold and silver are the ultimate forms of money in my mind, and I think most of our minds, we agree that gold and silver are definitely money, and we are going to hold on to these. So my logical brain holds on to these and understands that through the course of time, they will be able to provide a wealth preservation savings account in a sense. Its dividends are its intrinsic value, and that is something that people that hold these metals in electronic form and exchange-traded funds, they don't really get it, because they don't get to touch it. They don't get to hold it. And so they see it as just digits on a screen. When you hold the physical, you are invested in the physical aspect, the tactile aspect of these metals. And I use that term in a different sense, because you have paid this premium for these metals, and they will maintain themselves in your possession. The cost of holding them, the risk of holding them, is all enveloped around your being and your personal security situation. These eagles here are in my possession. They are guarded by two other folks named Smith and Wesson. For the ones that are at least in my possession, at least for right now, until I can move them off site. And but nonetheless, that value is something that transcends beyond what paper can tell us, and whatever electronic digital ones and zeros can tell us. But the vast majority of the market, and even to us to a certain extent, we still believe in cash and find its utility to be the most liquid thing that is out there, even in times of panic, at least an immediate panic. Until we see a hyperinflation to the likes of the Weimar Republic, or something that we saw with Zimbabwe in 2008, we are going to utilize cash for transactions, and be able to have faith in it with that, for that very reason. And but nonetheless, those of us who hold the metal, well, we are still certainly not going to sell it, and it's less likely that those of us who are physical stackers of silver or gold are going to sell these metals in a panic. because of the economy crashing. We'll hold on to our dollars. We may even cash out our exchange-traded funds, but the physical silver we'll hold on to. That's what it's about. It's the ultimate form of discipline, in my view. It makes it much more difficult to liquidate these in this particular time. And of course, if silver were to go down, we'd be fooled to sell it for even what the premiums they would pay above spot right now if it drops in half overnight or over the course of a few days. But nonetheless, that is a scenario that could happen. We could see this movement if people panic in the markets. But that is where the panic will be. The panic will be on paper. It won't be in the physical. And that is the distinction and difference. You remember last year when this had occurred, we saw Silver Eagles selling for over $20 an ounce, almost right out of the starting gate, and up and up. Now the price did start to recover fairly quickly after kind of the reality of everything set in, but the premiums kept on rising at a greater rate even than the spot price increasing as well too. It will only be temporary. I feel that it will be a kind of like as a result in a sense of like a deflation before a hyperinflation thing, and that could be the scenario. I believe that $12 silver does hit, be prepared. If it happens again, it will be much more serious than it was, I believe, before, and it could mean for a springboard for a great jettison of the stock market and moving into cash, and then the next logical transition will be precious metals for those who are smart enough to accumulate them, and that being in the physical. Because at some point, people are going to start to lose faith in cash. They won't feel that safety of cash because of the hyperinflation that is bound to happen. And I believe that next time we do see $12 silver, there's a much greater threat of hyperinflation around that corner than there was this time. How much of these tools does the Federal Reserve have left that they've already distinguished and have done only a marginal amount of difference? Essentially, it's kept our head above water. It's kept that dollar going, that dollar index going for only so long. If we have another panic, even a small one that seemed like on the surface, I believe that could be a potential sign of larger trouble ahead. And again, I say that not lightly, because no one really never knows in the end how that's going to play itself out. But even as it were, there's only so many times that we can go through these types of things without it really coming back to bite us. Because each time there's trouble, the Federal Reserve goes in, and what can they do? Print more money, give out more money. They can give us all this cash in terms of payments, direct payments to the American public. But if that cash isn't worth as much as it was before, last time, people are going to get a little bit weary of that and realize that, hey, this isn't doing the trick. This isn't doing the job. And it's going to pull us even greater into debt, even faster. And all of these things will just balloon up into a big bubble that's eventually going to pop at some point. They can't print more silver. You can mine it, but it's a lot harder process to do to get these ounces out and into effect. So we'll see how it plays out, but I do believe that there is a path to $12 silver. I think I have outlined it, how we could get there. Let me know what your thoughts are in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch and listen to this video, and encourage you to please rate, share, comment, and subscribe.